Kick this off. Hello, everyone, and welcome to today's webinar, Budgeting During a Global Pandemic. If this is your first time using Zoom or attending one of these webinars, welcome. We're very, very glad you're here. If you hover towards the bottom of the window you're looking at, you'll see a toolbar pop up for the Zoom feature. And this is where you can keep yourself on mute, and you can also stop or start your video if you would like. If you click the arrow next to the microphone button, if you're having trouble hearing, you can switch to phone audio if that's a little bit better for you than a computer audio. And we would ask that you keep yourselves muted during the webinar so that we can minimize any background noise and distractions. You are welcome to keep your video going, or if you would like to make sure that no one can see you, that is perfectly fine as well. You control your video in that same toolbar. And if you're curious, this is also where you change to that virtual background that you may have been seeing all over social media over the past couple of weeks. At the very bottom of the toolbar on the right, you'll see a chat button or a chat icon. This is where you can ask your questions during your webinar. We have been posting welcome messages through the chat, so hopefully you've seen at least one of those. And this is a great place to type your questions if you want to direct them either to me privately or to the entire group. I will keep an eye on this during the webinar, and we'll try to address as many questions as we can. So with that, I would love to turn it over to Emily Moses from the Kentucky Arts Council to give us an official welcome and kick us off.
Good afternoon, everyone. I wanted to just take a moment to say thank you for joining us with our webinar on budgeting during a global pandemic with Elaine Grogan-Luttrell from Minerva Financial Arts. Elaine has been a presenter the last 2 years at the Kentucky Creative Industry Summit. And we know that there are lots and lots of questions right now and concerns related to finances, both for individual artists and for arts organizations. So we talked with Elaine about putting something together just for Kentucky artists and organizations. Even though if we have some out-of-state folks on the call, we're happy you're also here. I'm not going to tell you too much about Elaine because I know she's going to tell you about herself. Once again, thanks for joining us today. And once everything is over, please feel free to follow up with us about any other questions you might have. Thanks.
Wonderful, Emily. Thank you so much. Yes, as Emily mentioned, my name's Elaine. I am a CPA with a certified personal financial specialist and then an accredited financial counselor. And talking about money, especially in the arts, is one of my favorite things to do. And I am also the luckiest money person ever because I get to hang out with incredible groups all over the country, like the Kentucky Arts Council, who are supporting this important work that you are doing in the creative industry. It is so important that we continue making creative work and celebrating the arts because they are absolutely vital to who we are as a nation and what we do as a people. So I am really glad to be working with the Kentucky Arts Council, and I'm thrilled you have joined us here today. Wanted to make sure to acknowledge a couple of ground rules. As I mentioned, you can put all of your questions into the chat and we'll address as many of them as we can as we go through this webinar. And with that in mind, we want to make sure we're sharing the floor with respect. So definitely put your questions there. We want to make sure your voice is heard. And I also wanted to make sure to acknowledge that you all are experts in your own experiences, especially now. You know your organizations and your own creative practice better than anyone else. So that means we are all equal parts teachers and learners. So if I say something that resonates and makes perfect sense for you and your organization, that is awesome. Take that with you. But if there are other ideas that don't really feel like they're a good fit, feel free to just leave them here in this space. You only need to take what really makes sense for you. And then lastly, because there might be some sensitive questions that come up as part of this conversation, especially as individuals and organizations struggle with some very real financial questions, we want to make sure that the stories stay within this space, but the lessons leave. And Bill, thank you so much for sending in a question. If you just sent it a couple of minutes ago, I probably didn't incorporate it into these materials, but if you'd like to put it in the chat, I'll be happy to address it if I can. Any questions that were received before somewhere about 2 o'clock Eastern today, did find their way into these presentation materials. And as Emily said, you can always follow up with the Kentucky Arts Council or with me afterwards to make sure your questions are answered. This seminar is being recorded, and afterwards you will receive a copy of the recording, and you will also receive a copy of the slide deck. So you'll have access to these materials to review later and to follow up if you have any additional questions. So what are we doing? We're talking about budgeting, of course, and very specifically, we're going to identify this idea of scenario planning that you may have heard about and talk about sort of step-by-step what that would look like for an arts organization. We'll also spend quite a bit of time describing the impacts we're seeing on revenues and what that means for planning long-term, and we'll build out some strategies to solve what we assume will be budget shortfalls in your organization or your individual budget, and think about some interesting ways of making sure that the numbers still make sense, even as you continue to grapple with some challenging things and think about making work and serving your community creatively in whatever that looks like for you. This webinar is being attended by both individual artists and arts organizations. So we will have some information that speaks to both groups. So if you live in the middle and have experience on both sides, the organizational side and the individual side, you're in good shape. And if something from the other group doesn't make sense for you, feel free just to ignore that. This, of course, is being provided for educational purposes only and is not intended to constitute tax, legal, or accounting advice, but you probably knew that. Now, if we were doing a normal budgeting webinar, I would talk to you about how a budget is this powerful tool that serves as a financial plan for allocating your resources. And we talk about how it's iterative and imperfect and it's internal to you or your organization. And we talk about all the aspects of how empowering thinking about a budget can be. We'd also probably go through the 5-step budgeting process that I really like, which essentially is rooted in something called zero-based budgeting, and we'll talk about this in a little bit. But it basically follows a process where you're defining parameters of what you're budgeting, you're brainstorming expenses and then quantifying them, and then figuring out how to fund those expenses and making your budget work. But these are not normal times, and you probably knew that. We are in times of a global pandemic where there's a whole lot of uncertainty around operationally what things are going to look like, what programming is going to look like, what fundraising is going to look like. So that means the normal budgeting process has to be modified a little bit, and that's okay. A budget is designed to be a flexible tool, and you can certainly adapt it to this moment in time. So what I'd suggest that you do is adopt this idea of scenario planning. And this is what we're seeing a lot of organizations and individuals and companies do. They're essentially starting with where they are right now using an existing budgeting framework and existing information about where revenue or income or contributions come from, where expenses go, kind of using all the existing categories, and then laying out a couple of different options for what the future might look like based on a very optimistic scenario, a very pessimistic scenario, and then 2 scenarios that might fall somewhere in between. Then organizations are using that scenario planning tool to help brainstorm new and different ideas about where revenue might come from, whether that means adapting what you're doing to an online or a virtual environment, or whether that means thinking about serving the individuals you serve in a slightly different way. And I would encourage you to be very open to what those ideas might look like, even if there might only be 2 or 3 of them that really make sense for your organization. But I imagine lots of people around you are giving you lots of ideas about ways you can continue to make money. So take those ideas with the good grace they are intended with, and gather those ideas. And then we'll walk through a process of sort of evaluating which ones might really make sense for you. Because if we have learned anything during the past couple of weeks or so, it is that there is no one size fits all for every organization or every individual. It really takes a lot of work to think about what makes sense for you and even what your different scenarios might look like. We are all sharing some common trends about what's happening economically, but how we are all responding is a very personal choice. So make sure you're gathering the data and then thinking through those choices. So, to go into this in a little bit more detail, the first thing I would suggest that you do is, as an organization or as an individual, sit down and really define kind of the guiding principles that will govern your budgeting decisions, certainly over the next couple of months and maybe even over the next year or two. What I've been seeing from other organizations is that there's usually one guiding principle that relates to prioritizing the health and safety of your people. And you can define people more specifically. This could be your staff, this could be your performers or your contractors. It could be your audience members or your festival attendees or your customers and clients. You really can define people in any way that makes sense for you. But we are seeing a lot of organizations articulating very clearly that they are going to be prioritizing health and safety of those they serve and those around them. And that's important to sort of have in writing because it may inform some expense decisions that you make down the road. Maybe this means you will be spending quite a bit more on hand sanitizer or cleaning supplies or other kind of safety precautions. Or maybe this means you will be limiting attendance in a particular space for a performance, perhaps. Or maybe this means you will be limiting use of your office space. And so your staff might be working remotely for extended periods of time. Having this as a guiding principle can sort of help to inform some of those future decisions. And having these guiding principles listed out means that you can come back when you're struggling with challenging decisions and compare the options against these guiding principles, which may make it more clear what the right potential solution or the right decision might be. In addition to seeing principles around health and safety, we're also seeing guiding principles that very clearly articulate prioritizing programmatic expenses and mission-centric work. So to the extent that you want to break this down into more detail, I think you certainly can. For organizations, I think that might mean kind of listing out your programs in order of priority. That could help. If you don't want to put that in writing, I don't blame you. You can just sort of keep coming back to this idea of prioritizing the art or the mission or the programs. Organizations are also sharing their transparency and what they intend to do to be transparent about some of the difficult decisions they might be facing. If you are an organization, I'd encourage you to get your board to share some input right here. Some organizations are also expanding this guiding principle to articulate a communication strategy. For example, how often they will be communicating about changes with stakeholders or individuals or staff or any other individuals that have an interest in the organization. We also want to make sure we keep in mind in thinking about the budget that we need to be balancing short-term needs and long-term needs. And sometimes there's some tension between those two priorities. So acknowledging that we are going to be trying to think about both is important right now. Some organizations are underscoring the importance of ethics in their purchasing choices right now, whether that means prioritizing your local community for purchasing choices or the economic impact within kind of your geographic region. That could be something that you might want to articulate as a guiding principle of these decisions. And then lastly, we want to make sure that we state clearly that we are paying attention to some key metrics and then that the plans can be adjusted on an ongoing basis. I wanted to adapt these for individuals as well. If you are an individual artist, you might not need to be as formal in articulating these guiding principles as an organization might be, especially an organization working closely with a board of directors. But I still think it's useful to kind of list out these things that are going to be informing your choices going forward as you're deciding and making very hard choices about what you're going to do creatively, which opportunities you're going to pursue, and possibly which expenses you might be postponing until future years. So having a list of guiding principles, again, helps frame the entire conversation around the priorities that really make sense for you. And this serves as a little bit of a maybe roadmap, perhaps, as you face a difficult choice, then you can come back to these guiding principles and hopefully the correct choice or the best possible choice could become clearer as a result of having these principles. So that's our first thing. And once you've got that in place and everybody's on the same page with respect to those guiding principles, then we want to start digging into the models. And if you have someone within your organization or on your board, or if you're an individual artist and you've got a friend who can help you kind of dig into these numbers, that's a really good person to tap right now and have them share their expertise. If you are doing it yourself, you are totally capable of doing this as well. But basically, what we're going to be doing is using your existing budget, your existing categories, and your existing framework, and then we're going to be laying out the different scenarios. So this is what that might look like. And I'll remind you again, you will have access to these slides afterwards, so don't feel like you have to capture every single word on them. You can review this information a little bit later, and that's okay. But if you're an organization, you might have income categories that look basically like this. You might have some different ones or some ones that go a little bit deeper than others, but you may have some earned income, whether that is ticket sales or admissions or some other source of revenue from some sort of exchange transaction. And then you might have different categories of contributed revenue, including individual gifts, governmental support, and then maybe some corporate or foundation support. Your expenses probably fall into some major categories like salaries and program expenses, facility costs, things like that. And if it makes sense for you to organize your expenses by function, so by program and then administrative or overhead and then fundraising, that's okay. I've listed them here in sort of a natural classification of what the dollars go to. But if you want to look at them by your functional categories, that's okay too, especially if that's what your current budget looks like. And I'd encourage you as well, as you're listing out all the different income and expense items you typically have, remember, don't get hung up on the numbers yet. Just list the words and then lay out some different columns for building out those scenarios. If you're an individual, your budget is probably going to look pretty similar. You're going to have all of the different sources of income you might have. Maybe you have sales or client service work, some grants. Maybe you have individual support if you have a Patreon sort of program, or you have ongoing support through crowdfunding options. And then maybe you have related income, like through teaching in addition to making work, or something else that's related to your art. Your expenses here that I've listed all relate to your creative business, but if you are an individual, you might think about building out your budget and planning for different scenarios that will take into account your creative business, but also what it costs you to exist as a human. That's a choice you get to make depending on how you want to think about this budget. If you're an organization, you're only thinking about the organization. But if you're an individual, you can think about your business of being an artist, yourself individually, or a combination of the two. Either way is perfectly fine. Once you've got sort of the framework built out, it's important to articulate what the 4 scenarios are that you'll be looking at. And I like having 4 scenarios, but I've certainly seen organizations with 3 scenarios, sort of a worst case, a best case, and then one in the middle. Having 4 gives you some flexibility to have 2 kind of middle scenarios. If you have more than 4, that's probably too many, but I would encourage you to at least think about having 3 different scenarios. And I've presented them here from the most optimistic to the least optimistic. And these scenarios will look different for every organization and for every individual based on what your typical season or fiscal year looks like. I will share, though, what we're seeing tends to be a very optimistic scenario that assumes things will get sort of normal-ish starting later this fall, possibly even late summer. You will not have revenue at the level you had last year in terms of ticket sales or contributions or support, but some organizations are modeling a fairly optimistic scenario where they might earn, say, 85% of their normal revenue for programs that are happening this fall. And then the extension of this scenario is that things will get normal-ish by early 2021. So maybe that means you'll have half a year of less than what you had planned revenues, but then they'll bounce back by 2021. I would call that the most optimistic scenario, but I think it's important to have that as sort of a baseline. And depending on who you're communicating with these scenarios, some organizations have been even using this first scenario to show, okay, if we were not in a global pandemic situation, this is what our budget would look like. And that's okay too, if it's helpful to give your board some context. At the other end of the spectrum, our scenario 4 here is the least optimistic, which is basically assuming there will be no new revenue or contributions aside from that emergency funding through summer of 2021. This is what we might think about for an organization that is very heavily reliant on governmental funds or governmental revenue. It's probably very likely that we'll see a lot of those income sources be severely curtailed. Or if you're an organization or an individual that relies on large public events or gatherings, it's very likely that there will be no or very little revenue through certainly spring of 2021. So you might be focused on this kind of scenario, and that's okay. We want to make sure we're modeling out the numbers to see what this would look like. Then the two scenarios in the middle, scenario 2 and scenario 3, basically play with how flexible revenue is going to be over the next, I would say, 12 months or so, right? So depending on the type of work you do, maybe you are an organization that has performances that continue on a fairly regular basis throughout the year. Maybe you look at, say, 50% of what your revenue would be in the fall, and then maybe 75% of what your normal revenue would look like for the spring. And maybe that's a scenario that might make sense for you. Maybe instead you say, okay, what happens if we cancel the first 2 shows, but then things start to get back to normal? That's another scenario you can model out or play with. If you are an organization that relies on membership, maybe you are a museum or an organization that involves some sort of space where you welcome people, maybe you're looking at your kind of main driver being ticket sales or foot traffic. And maybe you're looking at, say, 30% of your normal ticket sales starting at some point this fall, if you're assuming that you will only be letting in people at, say, 20 to 30% of your normal capacity to maintain social distance guidelines. So you can see there are different ways of modeling this out, and I would encourage you to really look at what do you do? What is your programming? And play out the different scenarios in sort of a worst, best, and then somewhere in between model based on what your normal models would look like. After we've done that, we've got our guiding principles, and then we've sort of built out the model and articulated what our scenarios might be. The next step is to really project what we think the revenue might be in each of those scenarios. And I would encourage you to do this on a line-by-line basis when it comes to your income. And the reason I would suggest that is because there are nuances to each different line of income that maybe move the income in a different direction depending on what unfolds in terms of the next year or so. So for the individual artists on the call, if your income comes from fairs or festivals primarily, maybe you assume that your income will be, 30% of what it normally is for the fall. And then maybe you assume it'll be closer to 50 or 60% by next spring or so. That's one assumption you could make. If you have historically been selling most of your things online, maybe you say, okay, we know people are struggling right now, so we'll assume 70% of our normal sales is what we'll be able to maintain. Conversely, if you typically sell through a gallery or through corporate partners and you serve a segment of the population that might not be as affected as some other individuals, maybe you say, you know what, I think my sales are going to still be okay. Maybe I'll plan on consistent income from what I earned last year, or maybe 90% of what I earned last year. That is certainly reasonable depending on who you serve typically with your art. For those of you that also teach, I know there were a couple of questions that came in about this. I think it's important to look at that teaching income in isolation to see what the impact might be. If you teach at the college level, perhaps as an adjunct instructor, I think it's reasonable to think about maybe being able to teach fewer classes if enrollment at our colleges and universities goes down. I think if you typically adjunct at a community college, you might see enrollment at the community college go up, in which case you might find yourself teaching more sections, which could be a good thing. If you teach at an elementary school or through the public school system, I think it's interesting to look at maybe what some of the state funding actions have been. I know I live in Ohio, and our state announced this week some pretty major cuts to elementary and secondary education. So that might mean fewer teaching artists in Ohio schools over the next academic year. I think it's important to stay tuned to the actions Kentucky is taking to see if that might affect your teaching opportunities within the elementary and secondary school system. If instead you teach at a private elementary school or a private secondary school, and that particular institution is less reliant on state funding, you might have more opportunities to be a teaching artist. So again, we can see how it's really important to dig into your own specific situation as you are making your most informed guesses about what your revenue might look like in the future. If you receive a lot of funding as an individual artist in grants from your city or your state, I think it's reasonable to think some of those resources might go down in the future. So I would pay attention to that and maybe assume that you may not get a grant from your city or your state, even if historically you've been able to count on, say, a couple of $1,000s in support. And I think if you have a part-time job or a full-time job with a not-for-profit organization or any other company, it's also interesting to think about the struggles that company may or may not be having and what that means for your part-time or full-time job going forward. Because as we know, individual artists often earn money from a variety of different sources. So each source may be affected slightly differently. So it's important to understand the total context on a line-by-line basis as you're making some assumptions about what your revenue might look like going forward. If you are an organization, you're going to go through a similar exercise. If you are a performance organization, so you regularly perform for audiences, I think it's important to think about where do those performances happen. If we're talking about large public performances in a park or an outdoor setting, your attendance might not be as affected as it could be if you typically perform in a smaller location that's indoors and with lots of seats right next to each other. I think as you're modeling out what your ticket sales might be, it's also important to think about the potential social distancing guidelines that could be in place. We're seeing some organizations assume that they will sell between 30 and 50% of their normal ticket sales simply because you may be in a position where you are leaving one empty row in different performance venues, especially those that are inside, and that might mean you're selling half as many tickets. I've also seen organizations who have performances planned in relatively large spaces. And so for them, they're planning on the same level of ticket sales, or maybe 90% of what their normal ticket sales would be. And they're just assuming they're going to be using the entire auditorium rather than just, say, the first floor of it or something. So you know your organization best. And as you think about what ticket sales might look like, it's important to consider both how many you're able to sell and then whether the audiences are going to be eager to fill these theaters again and what that might look like. If you are a presenting organization and you are very reliant on touring shows that are coming through, you're in a little bit of a holding pattern because I imagine most of the groups you partner with haven't committed to a touring season yet for the year. So you might be in a position where you are thinking about alternative uses of your space, especially if there may be fewer tours coming through over the next year or so. If you're an organization that has educational offerings as part of what you do, you're probably thinking very clearly about what the summer is going to look like, especially if summer camps tend to be a good revenue source for you. I think depending on the age of students you serve, we've seen some organizations moving a camp-like experience into a virtual experience. I think that could work really well with older children. I don't think that's going to be a great option for your preschool age campers, right? So you might be thinking about new and different ways to continue those educational offerings over the summer. And if your educational offerings typically go year round, you might be thinking about what this means for that. Possibly this means more opportunities, especially if students are looking for additional creative outlets year round. But it also might mean that families who were already struggling might be struggling even more. So your educational revenue might be going down. Again, it's important to really think specifically about who you serve and what the impacts on them might be so that you can incorporate some good assumptions into the different scenarios you're planning. I will note as well, a lot of organizations generally rely on some sort of December holiday show that tends to be a really lucrative performance. I think it's interesting to think about what that might look like this year. And if your organization typically relies on that particular program, maybe even to subsidize some other programs, I think it's important to plan for that to not be as lucrative as it would normally be. So file that away and put that into your scenario planning so that you can get a real sense of what the numbers might look like. If you're an organization that relies heavily on tourists, maybe you are a creative space that is located next to a convention center, I think you'll see a pretty major impact because we might not see travel sort of return to pre-pandemic levels for another year or so. So I think it's important, again, that you understand kind of the domino effects that might impact those you serve. The same is true, of course, for state funding. Pay attention to what Kentucky is doing and what they're publicizing, because I think it's safe to plan on reduced state funding for a long list of reasons. States are collecting less in sales tax revenue, and also with the level of unemployment, they're collecting less in income tax revenue. So I think it's important that we understand that the effects of this might continue to be felt in our state funding for the next couple of years or so. If you have strong corporate relationships or strong corporate partners, it's interesting to almost drill down on an industry by industry basis to see how those corporations are being affected. We're seeing that financial services are still doing okay, more or less, as an industry. Some media companies are also still doing okay, and some distribution companies, including grocery stores, are still doing okay. So for your relationships with companies in those sectors, it could be interesting to explore what some sort of holistic sponsorship might look like, while also acknowledging that if most of your sponsors are hotels or other companies that are maybe in the travel and leisure industry, there are probably not going to be corporate sponsorships from them in the future. The same is true of restaurants as well. So dig into what some of those relationships look like to see if there's still something that might make sense or if there's not. I did want to share a couple of quick stats that could be interesting. Again, it's important to dig into all of the information that's out there and sort of maintain kind of a little bit of an awareness or keep your ears perked for information that might affect you individually or your organization. The state of Kentucky is planning on revenue reduction of $3.8 billion. This is from an article in the Lexington Herald Leader from yesterday. I can share as well that in the city of Columbus, where I live, our Experience Columbus tourism office is planning that there will not be any major gatherings until spring of 2021, just based on major events, major sports events, major conventions or other gatherings. So that's going to have a trickle-down effect on any of the businesses that rely on that visiting foot traffic for sales or attending different events. And if you watch the unemployment numbers this morning, you know that now we are up to 33.5 million individuals that have filed for unemployment over the past couple of weeks. That's a whole lot of individuals that are hurting right now and filing for unemployment. And we keep seeing that number go up on a weekly basis. So I share this information to remind you that this is not going to necessarily be a quick exercise. So if someone is telling you, oh, just assume revenues will be down by 20% and then build your budget based on that, that's probably not going to give you the level of detail you need to really plan out those different scenarios. If that's your first pass at the budget, I'm okay with that. But I really would encourage you to go line by line and see what you think the revenue impact might be on your unique different sources of income. One of the questions that came in ahead of time was, what time frame are you supposed to look at as you are planning these different scenarios? And I really do think this is a wonderful question. I think 6 weeks ago, I would have told you, focus on the next 3 months and then maybe build out a year or so. I think now that we've been through a couple of more weeks, you should keep your focus on the next couple of months when it comes to managing your short-term expenses, especially when it comes to some of that emergency funding you may have received, whether that is through an emergency grant or some of that PPP funding through the Small Business Administration. It's important to still look at the next couple of months, but I would challenge you to look certainly through the end of your fiscal year and then one more year into the future, depending on when your fiscal year falls. That should take you probably 18 months or so into the future. And that's not a terrible planning horizon to have right now, especially as you are planning out the different scenarios and when you think things might return to normal-ish or so in the future. I think if you could also take it one more year beyond that, that's a good exercise. Don't necessarily do that today. I would keep your focus on maybe the next 12 to 18 months or so today as you're having conversations with your peers or your board. But if you can look a little bit further into the future, that's not a bad idea, especially as you plan for your revenues to increase and also plan for your expenses to increase over time. I think modeling out over a multi-year period is certainly useful. But again, we're looking more at the next year or so for making some of those decisions. One question that came in that I also thought was a great one was if there are any good ideas around approaching corporate partners or new funders right now. As I mentioned, there are some industries that are still doing okay. I don't think anyone is thriving right now, but there are some industries that are still doing okay. So if you have existing relationships, it's a really good time to be in touch and communicate with those funders or those corporate entities what has changed about your mission and your value and what hasn't changed. You are still probably doing excellent work and fulfilling your mission. And I think it's important to acknowledge that a lot of what you do hasn't changed. The value that you brought to the world still exists. The how of how you're serving those you serve or executing your mission may have been tweaked a little bit, but the value is still there. I would also encourage you to target those corporations that are able to support you right now. And I'm seeing some really interesting things around putting together some holistic sponsorship deals. So this might be something like if you are thinking about a virtual gala or something like that, partnering with some businesses in your area so that the purchase of the ticket to the virtual gala could support maybe your favorite local restaurant. Maybe they could do like a boxed delivery of, some cheese and a bottle of wine on a contactless delivery basis or something like that. Some groups are playing around with some interesting partnerships like that. I think it's also interesting to think about if there's some additional creative benefit that you could provide to the corporate sponsor. So this could be something like maybe you're approaching your financial institution and you want them to sponsor your upcoming season, and you are saying to them, we don't know what our season is going to look like, but we'd still like you to be listed as a sponsor. And so that means if there's a program, you'll be in the program. If there's a virtual presentation, we'll include your logo in that virtual presentation, and then maybe asking for an amount for that sponsorship that could also be enough to include, say, a private musical performance for some employees of the financial institution or something like that. Something that is providing value to your corporate partners in addition to acknowledging their support through some sort of traditional advertising sponsorship option. There's a question in the chat from Bill. Bill's question is, how do we change the mind space to realize the obligation of a corporate aspect, which was advanced by the law, to be as if a human? The institution arises easier from the creatives, which is different from the science. I love this sort of philosophical approach to this. And I think for me, as you're having these conversations, I think it's important to recognize the humanity of the entity you're talking to, right? Because even if it is a business that is doing okay right now, there are still humans in that business who have been affected pretty dramatically by everything that's going on. So in an interesting approach could be to focus on the human aspects and the community aspects of uplifting each other. And that might look like a corporate sponsorship with some additional benefits. Andy shared a question in the chat as well. Liability insurance and liability for arts organizations may make it impossible to gather until there is a reliable vaccine. That is certainly a possibility. As an artist and someone who works for an arts organization, you're trying to create exciting virtual content, but you are competing with New York, Chicago, LA, the world. And I'll add to your question, you are competing with the world, many of whom are offering free content, right? Which on the one hand is great for the arts. Every time a celebrity or some well-known individual or group makes their programming available for free, that is an opportunity for individuals to experience the arts that might not normally experience the arts. And to Andy's point, that means you're competing with something that's being offered for free. And it might be something from a marquee organization based in LA or Chicago, or even a celebration of Sondheim's birthday. So I think it's amazing that you are nimbly reacting to some virtual programming, and that brings with it some challenges. So my suggestion, Andy, to this particular idea would be to think about the ways you can personalize the experience, because those individuals you already serve love you, and they love you not despite the fact that New York and Chicago exist, but they love you because of what you do for the community. So we're seeing some interesting programming that is maybe capping the number of attendees to some of these virtual events to say 15 or 20. So there can still be that kind of intimate exchange, maybe with additional Q&A, additional talkbacks, maybe even some sort of, humor. There was a storytelling group that has moved their storytelling events into a virtual space, and they are opening up Q&A with the attendees, and they're curating the Q&A, but they're opening them up to the attendees so that the storytellers can respond to the questions in real time. And there's a very sort of humorous flavor to their approach. There's also a musical group that has started doing private concerts, and they're charging for the concerts. So one person would, in theory, underwrite the performance for a couple of $100s, and then invite all of their friends to attend this private concert. And then they're muting everyone during the performance, but then opening up the audio between songs so that people can dialogue. I attended one of these a couple of weeks ago, and I am no musical expert, but my brother is. And so he was asking the musician different questions about how the guitar was tuned and, why he made a particular choice. And even just hearing that level of interaction was amazing. And that's not something that I could get if I was watching a performance of Hamilton via Zoom or something like that. So I think thinking about sort of the intimacy that you can provide and the community aspects is a good way to root your virtual offerings in the real value you provide. And that would be my suggestion to you. I also think it's okay to have one person, maybe it's a board member, maybe it is a fan, maybe it is a client or customer that really loves your work. It's okay to have them kind of sponsor that type of event, collect some amount of fee from them, and then invite others to contribute in donations as well. I think that is perfectly fine. So just play with the verbiage for how you would do that to make sure it's something you're comfortable doing. Speaking of things you're comfortable doing, Andy's question is a great segue into potential revenue options that many people are exploring. And one of the questions that came in ahead of time was very simply, how can I find new revenue streams? And I love this question because lots of people are probably giving you ideas, and I am one of them, right? I just threw out a couple of ideas. Not all of my ideas are good ones. You get to decide what makes sense for you and your creative practice and your organization. And the way I would suggest you do that is to go back to what you do really well. That could be going back to your mission statement. It could be back to your unique value proposition. If you've done any of the work through the Kentucky Arts Council at really articulating your value. And then thinking about what those you serve really need right now. It is possible that they need community connection more so than they need another piece of work. And that's okay. You can provide that community connection in a virtual space. It's not the same, right? And sometimes people are so fatigued by Zoom events that that might not be what they need right now. But you know who you serve and what they might need. So think about how your value can adapt to that, and then brainstorm ideas, all of them, even the bad ones, because you need a lot of different ideas to start evaluating them. So one idea would be going through kind of this criteria, and this is just the criteria I would suggest, but you get to decide what makes sense for you. So does this new idea align with your value proposition or align with your mission? It probably should, and it should be rooted in your strengths, which I think is important. It also has to be something that those you serve value right now. And I think it's important that we not guess about this, right? We want to make sure that you're doing research to confirm that you've talked to those you serve or you've communicated with them in some way, and they have said to you, yes, absolutely, this is something I value right now. And this is also an opportunity to tap into some of those partnerships you might have. These might be existing partnerships or they could be new ones. We've been thinking about sort of recreating a live experience that would take place in your home, right? So one partnership, as I mentioned earlier, could be with a restaurant, right? So let's pretend you are an individual artist and you're a musician. And instead of playing at your favorite pub on a Friday night where you see all of the regulars and you maybe collect a fee or split the door with the pub, maybe instead you recreate that particular experience and you do some sort of ticketed event through Eventbrite or something like that. And the ticket would include some sort of to-go meal from the restaurant and also something for you. That could be a way to make use of an existing partnership. And I mentioned doing that in the context of a virtual gala as well, which a lot of organizations are experimenting with. And then also this idea of some sort of corporate sponsorship, including a performance or some sort of creative outlet being provided to employees. I think especially for financial service companies or grocery store employees right now, essentially healthcare workers as well, these employees and these individuals are under a lot of stress. And so the healing power of the arts can be something really powerful, and you could have an effective partnership to make use of that. There's a question in the chat about sort of collecting funds and will people honor their payment commitments? I think that tends to be a challenge no matter what. I like the idea of some sort of ticketed event through a third-party platform. You can certainly do that so people would pay some amount, and then after they pay, they receive access to the link or the private event or something like that. If you have come to love Zoom, you can even do that through the Zoom platform if that's something you're interested in. I think if you're accepting contributions or donations, people might say things and then not follow up, and that's sort of a reality of fundraising, unfortunately. But I think to the extent that you are connecting with your audience, I think now's a time where people are rising to the occasion in many cases. As you're vetting these ideas as well, make sure you're doing the math to really understand what the cost of your new idea is and what you think it will generate in contributions and revenues. And again, you can do this in multiple scenarios because you will not be certain. And then make sure you're making the numbers work. Because if you are pursuing something with revenue expectations that are not as high as the expense expectations, right, then that's not really solving your problem of not having enough revenue. We see this, for example, if you aren't paying attention to the cost of a Zoom subscription or something like that, or fees from an Eventbrite kind of platform or something. So do the math, make sure it makes sense. And if it doesn't make sense, make sure you're still doing it on purpose for community building or as a marketing opportunity or some other benefit you're getting out of it. Make sure you know what success looks like, whether that is in financial terms or in sort of marketing terms, new individuals that you're connecting with or additional individuals that are being added to your list. And then also make sure that whatever you're doing has some sort of strategic purpose embedded into it. One organization I worked with talked about creating a digital care package. And I thought this was so interesting because this organization decided very early on they were not going to simply move their programming online. They felt very strongly that what they did not translate into a Zoom-like platform. And so they weren't going to do that. But they did want to continue connecting with those they serve. So they asked for $25 contributions. And in exchange for that contribution, there was a digital care package, which was a creative writing of a poem or a dance performance or a brief musical composition that was then delivered to someone that they named or specified. And what I thought was so interesting about this idea is how, number one, it was rooted in the organization. They are all about fostering community through the arts. So this was easily very aligned with their mission. And it was an interesting way to collect a contribution to support the artists that they were already supporting. Half of this contribution went to the artist in exchange for their time in helping to create the digital care package. But then it was interesting as well to brainstorm some ideas about how you could take this idea even further. So some of the ideas we had, and again, not all of them are good ones, but what if the recipient of the care package also received some sort of ask to say, we hope you enjoyed this digital care package. If you would like to send one to someone else, here's a link where you could do this. And this organization was collecting information about the recipient. So obviously they would not make an ask if someone was particularly ill or grieving or something like that. So they were taking care to make sure their asks were intentional and recognizing the humanity of the other person. But also, since we have these digital care packages now, can we use some of that footage and turn it into a marketing campaign that might generate some additional income, generate some additional press, and then generate some additional people who might then love the idea and want to send a digital care package to someone they know? And all the while, this is growing the list of individuals that are on this organization's mailing list. So they could possibly receive a year-end appeal or possibly receive an invitation to something when things open up again. So it's interesting to think about how there are different layers to using these ideas strategically, and the ones with the most strategic benefits might be the ones that make the most sense for you. Okay, so now we're going back to our steps for scenario planning. Remember, at first we reviewed our guiding principles. We set up different models and different scenarios. Then we thought about revenue from each of those scenarios, going on a line-by-line basis to see what the impact from different categories might be. And then we brainstormed all sorts of new revenue ideas. So now for step 5, we get to move to the expense side. And this is where we might be facing some challenges to make some really hard choices. Personnel is probably your largest expense. It would not surprise me if you are looking at modeling pay cuts or maybe layoffs for your staff. As an individual artist, this might mean you're thinking about what if you earn less from your art for this particular year, and that is a reality you might need to face. Your facilities costs and your programmatic costs are also probably fairly major expense items. So some organizations are playing around with what does it look like if you get out of a lease over the next couple of months or so, or if you cut your office space in half. This may or may not be possible, but as you're going through on a line-by-line basis, what you're really doing is basically modeling different revenue scenarios and then figuring out what potential expense cutting options might make sense for you. If you go through this exercise and you think about how it can work over the long run, I think that's fantastic. But you still may have some immediate cash flow challenges. So this is where making use of those emergency funds can be really helpful. And also thinking about, as you receive those emergency funds, you might want to think about modeling out what it looks like to curtail your expenses now, even if you've got some funding, because you're going to need that funding to last as long as possible. Now, obviously, you want to do that within the constraints of whatever funding you've received. So pay attention to those PPP guidelines and also the restrictions from any of the emergency funders who are supporting you. But if you've got some flexibility, that's not a terrible thing to think about. You're also probably already in touch with all of your donors about releasing any restrictions on their gifts so that you can use the cash in the near term if you need to. And you're probably talking to your most committed supporters about making additional gifts or even making their year-end gifts now instead of at the end of the year to help with some of that cash flow. Ideally, we'd want them to be making second gifts instead of just making their gifts sooner. But again, you know your donors best, so that might not be possible for everyone. Also, if you are exploring some corporate relationships or partnerships or foundation support, it's okay to ask about multi-year commitments and see what that might look like as you are planning over the long run. It's also possible that you will go through this exercise and say there's absolutely no way this is going to work. And that's very true. It is possible this might not work for you. So if you want to reimagine everything or use this as an opportunity, maybe to think about what your core programs are, or if you're an individual artist, what your core value really is, there's an approach called zero-based budgeting that might make sense. This is what scenario planning kind of looks like. Zero-based budgeting is when you forget about where you are right now, and instead you start with a blank sheet of paper and you say, where do I want to be? And then instead of looking at your existing budget framework, you essentially rebuild your budget from scratch based on what your highest priorities are. And then you compare that to where your budget is right now and essentially eliminate whatever doesn't make sense. It is said sometimes that a crisis is a terrible thing to waste. Zero-based budgeting is basically the finance version of that, where you look very hard at your numbers and at what your goals are now, and you rebuild your budget instead of being beholden to what your budget was last year. This can be pretty powerful. I will warn you, this comes with some very, very challenging conversations. And then the last thing you need to do is continue to update these scenarios. Keep listening to those you serve, stay laser focused on the real value you provide, and then pay attention to the metrics that really matter to you. Maybe that is percentages of seats you can sell. Maybe that is guidance from your state or other membership organizations about when you can open up and what that looks like. Keep laser focused on those different metrics so that you can refine the scenarios as you continue. Many of you, especially the organizations, need an official approved budget to apply for grants, and your funders are not going to accept 4 different scenarios with varying levels of optimism. So I'd encourage you to share the scenarios with your board. Make sure they are on board with the difficult choices that might need to be made, and then ask your board to approve the scenario that you think is most likely. It will probably be one of those middle scenarios, but it might not. You know what is most likely for your organization. And if your board approves that, then you have an approved budget to use as you're applying for grants. If that budget does include a deficit, make sure you are explaining how you're going to handle that to your potential future funders. You might be dipping into reserves. You might be spreading that deficit over future years. There are different options. Just make sure you're explaining why you have a deficit, although we all probably know, and then what your plan is for fixing it. And then if it becomes necessary for you to approve a revised budget in the middle of the year, that's okay. Just make sure you're communicating with your funders about that. So this is the framework that we went through, this scenario planning idea of kind of where you are right now, where you might be with 4 different scenarios, again, going line by line and detail by detail to make assumptions that make sense for your practice or your organization. And then brainstorming new ideas and maybe thinking through some different criteria about which ideas it makes sense to pursue, because it does not make sense to pursue all of them. You know what's best for you and those you serve. And so focus on the ideas that really do matter for you. Here is a recap of those steps. We've got our guiding principles, then we set up the models and the scenarios, most optimistic to least optimistic. We project line by line revenue for each scenario. Then you kind of brainstorm those new revenue options. And then you make some hard choices about modeling what staff cuts or payroll cuts might look like, what deferred contributions to retirement accounts might look like, what it might look like if you reduce the real estate you're renting. And then you pay attention to what is going to unfold over the next couple months and adjust in real time. I hope this has been helpful. Again, you will receive a copy of this recording. You will also receive a copy of the slides. Huge thanks to Emily Moses and the Kentucky Arts Council for providing the space for these conversations to happen. And all the best to all of you as you continue the important creative work you're doing and the challenging financial conversations you'll be having as well. Thank you so much, and I will look forward to seeing you again soon. Stay healthy.